Hello, good morning, good afternoon, good evening, depending on where you are. My name is Prince Ikilowi, and you are welcome to Laprinzo Wealth Academy. In this channel, I talk about trading, how you can become a professional forex trader, how you can become a professional crypto trader. I talk about crypto forex and how you can trade boom and crash, volatility indices. Guys, if you're not making money in forex or trading, you need to subscribe to this channel and start learning how to trade professionally. You have to trade like a professional, all right? It's no more gambling, but professional way of trading. And also talk about mindset development here. We talk about how you can program your mind for success because the forex skills alone, the forex skills, the crypto skills, all the skills that I teach on this platform alone is not a guarantee for success. What will actually guarantee your success is when you understand, you understand, you understand the principles of wealth creation, the laws that govern wealth creation. The forest skills are just the branches, but there is one important aspect of it is the root. The root is you. Until you are built internally, you have the mindset of greatness, you have the mindset of success before you can become successful in trading. So a lot of people trade forex, they just teach people how to trade forex. That's fine. But here, what makes us unique here is that we teach you mindset, the right mindset to get involved in this business or any other thing you want to learn or you want to become in your life. So guys, if you're new to this channel, subscribe to the channel and also share the video, like the video, comment on the video if you have anything to you want me to talk about on this platform. So our topic for today is how you can analyze boom and crash, price action without indicators on how you can trade boom and crash like a pro. So let's get started. Now, the first thing you want to do, the major problem most people use, the major problem most people have is whenever they are trading all these indices or even boom and crash, they are using too low time frames. All right, but with my own experience, what I've come to understand is that it is better you analyze you analyze the market with a higher time frame. For instance, this is boom 500. All right, now first thing I want to do is I will go to daily time frame. All right, now I'm going to look daily time frame to see the direction of the market clearly with this daily time frame. I'll first of all map out my turning points. I call these strategic zones, turning points where market has turned and bounced back repeatedly. So let's get started with those. Let me map out places of interest. These are places of interest that you want to know, and you can only get these places of interest if you are using a higher time frame. So I'm going to use my horizontal line here, but it's not a straight line. I'll put it here. All right, this is a clear zone. All right, I'm going to put another one here because it's a zone. Let me just put because of this week here. uh Good. So this is a zone. Now this is daily time frame, right? I'm going to use this again. Now, if you understand how to map out these turning points, all right, your attention will just be on trading. You're going to tell yourself from today, I am not going to place any trade except price is on a turning point. All right. So this is a clear turning point. You can see, right? Look at what price did here. So I'm going to add another one here. All right. Oh, good. Now I've I've mapped out this turning point. This here, this is the turning point. Then I also want to see that another minor point is here. But here is a zone. All right. Those are your areas of interest, and that is where you want to concentrate. You want to concentrate on mapping out these zones. No. Okay. All right, so now we have a clear zone. Let's see the upside. Remember, I'm using daily time frame. Uh, Let me see here. Okay, it's a clear zone. Okay, come here. Wow. Right, so now zones are places where price has touched and bounced back repeatedly. So these are places that you want to focus on. You want to map out these places so that you can make your trading decisions based on price, the places where price has touched and bounced back repeatedly. All right. Now, if you look at this market has been on a downtrend. This is the daily time frame. The market has been on a downtrend, but with the way the market is behaving right now, right, the market is like about to go to the upside. So let's go to 4 hours time frame. This is, I call this top down analysis. All right, from the up to the down. So you can see that I have mapped out these turning points. All right, so now what happened? Price was here struggling. It was doing higher high. Remember, if you have watched my video on how to identify a trend is when price does higher high and higher lows. From this way down, price was doing higher high and higher lows, and until it got to this point and we saw this stop. So it could not break through this zone. It could not continue the higher high and higher lows. And it was ranging between these two zones. Right? So now we saw another movement. Price was ranging between these two zones until it broke through here. It came back to retest the same zone. Now it's now struggling on this zone. Now, how do you now make your buying decision? Now that price is struggling, I can also see a minor zone here. A minor zone here. Right? Can also see a minor. Let's go back because it's about history of the market. Price is all about history. This is far. Let's go. Let me take it down to 1 hour time frame now because we have to also look at the smaller time frame. Okay, now you can see that it is a minor zone, but it is very important that we take note of the minor zone. Let me make it maybe white so you can see how you are going to be trading this market with this pattern of trading. I've tested this strategy, I've taught this strategy to people, and every day people come and tell me your strategy works. So I'm sure it will work for you with proper risk management. Remember, with proper risk management, all right, no trading strategy is 100% perfect. You must have proper risk management. So with identifying these turning points alone, now you have seen that the downtrend, all right, the downtrend, look at the market. The market is a downtrend trying to give us, let me even use my trend line now. With daily, you can also see that the market is really forming an uptrend. All right, the market is forming an uptrend. So price went up, it came back, it went up again, it came back to test this trend line. Now we are seeing the price trying to head to the upside, but here is a minor zone that is blocking the market. That's why you're seeing the price is being rejected. How many days? It can be rejecting here for 1, 2, 3, 4, 5, 6, 7, about 8 days or so. Price has been rejecting here. So now what you want to do is to wait patiently. Let's go back to 1 hour time frame. All right, now now that price is doing this, let me remove this trend line so you don't get confused. Okay, now that price is doing this, what do you want to do? You want to wait for price to come back here before you think about buying. When you see price coming down to this particular zone, or if it doesn't give a rejection, it will come back here and give a rejection because of what? we saw a bullish movement. Let's go to 4 hours time frame. Why? Because we are thinking that the price may be going to the upside based on this daily time frame formation that we just saw here. All right, but remember, nothing is 100% perfect. It can also break through this zone. So what are you going to do at this moment? You have to go back to your 1 hour time frame or even 30 minutes to get on board. Right, so this is the market right now. Price is coming back here to test this zone. It's going to come back here to test here or here. So if you see a reversal candlestick like this, I think I'm going to teach candlestick patterns here. One of these videos I'm going to be doing here. You're going to see something like, if you see bullish engulfing like this one, look at it here. It's bullish engulfing. Look at it here. If we are watching this market coming down here, you would have placed a trade when price gets to this point and give us this bullish engulfing, or price give us something like a pin bar. Some of us call us kangaroo tail. All right, because of what? The price is on a zone. You don't want to place a trade if price is not like now. All these places that these are minor zones. You don't want to concentrate so much on those minor zones. Your attention is on these major zones. Like here is very, very important. So you are going to use a higher time frame to see the movement, the movement of the market, to see the direction of the market, and then you bring it like now. Price is ranging between these two zones now. Now, if it comes down here, we are going to have a buying, we are going to be expecting a buying opportunity here if we see a rejection candlestick such as this. Hence, the market can come down here. All right, if it breaks down here, if it breaks this zone, if it doesn't give you a rejection, if it breaks down this zone, we come do this, come down a little bit down here, right? And then it will give us this kind of formation. You may come down here, right? Or even up here. Let me just make it up here. But they are all the same zone. So whenever you see this kind of rejection on a zone, if you break through this zone, you don't want to jump on board because price has broken through it. Allow it to do this. Some people make the mistake of trading without a retest. Allow it to do this, and then most likely it should do this. It do not give us a candlestick like this, maybe a bearish engulfing or a, a pin bar, kangaroo tail, whatever. It's going to give us a bearish candlestick like this based on the candlestick pattern you're using to analyze the market. Then price will now go to the what? The downside, trade up to continue the downtrend. But for now, we are waiting for the price to come here. Even this white line here, before you think about buying to the upside, right now I don't expect anybody to buy here because of what is on a wrong place. You have to allow it to come down to this zone before you make your buying decisions, or you allow it to break this zone here. Yeah, it's going to break here. Before you make about making a buying decision, right? It's going to break here. It will come down here. All right. It may not be that high, but I'm just giving an example of what price can do. Then you will now see a bullish candlestick. If you see a bullish candlestick, bullish engulfing, a pin bar. Let me color this into bullish candlestick so that you can see. I'll make it green. Right. All right. So when you see something, if price come back here for a retest, big a little bit. Let's bring it down here. All right. So when you see a candlestick formation such as this is bullish engulfing on this breakout. That's when you want to think of buy. And where are you going to take your profit? Your take profit is going to be where? Your first take profit is going to be here. And don't take profit on exactly on the line. You take it before, a little bit before. Like now, this is the zone, right? You can take your profit here. All right, then that first take profit one, you can take a second profit on the next zone. So your own is to map out this turning point with a higher time frame. Like now, the next turning point is here. So you already know that if price does not turn from the first zone, it will take to the next one. So the next one is here. Ideally is here. All right, if the uptrend has really started. So this is how you can see. So now I'm going to be expecting price to come down here, up here. Right now is here. If either it comes down here to give me a rejection to the upside, I buy, or if it breaks through here and it gives me a retest, I'm going to say, okay, it may come down to this level here. But this is the places that people have all over the world have interest. So you need to learn how to map out these turning points, and don't use a lot of people use 5 minutes, even 1 minute time frame to trade this market, but all this time frame doesn't really give you the direction of the market. You can see what this 1 minute is doing. That's why I said there's spike. You see all this spike is very confusing, but when you use a higher time frame to analyze this market, it gives you clarity about where is the market going to, which way am I going to buy, am I going to sell. It's not just like you see uh because you see one bullish candlestick and you think that the market is going to go up without even knowing the direction of the market. Even if you have to use 1 minute time frame, you should use 1 minute time frame when you must have known the direction of the market. Like right now, the market is ranging. All right, the market is consolidating. Now you know that the market is consolidating. So it's either you wait for the market to come down here to give you a signal. You can now go with your 1 minute time frame because it is now on its turning point. It is now on a strategic turning point for a buy. If you come here because it is ranging, if price get to this point, if you want to sell, fine, because why is ranging between these two zones. But that is the time you can come back to your 1 minute time frame to use the 1 minute time frame for an early entry, but use higher time frame to see and map out these turning points for you to take advantage of these turning points and make your trading decisions. I started with daily before I brought it down to 4 hours to even 1 hour. Let me see the crash 500 as well. This is crash 500 also is on a downtrend daily time frame, right? So let me see the points that we have interest. For instance, here is a point. All right, this is, let me make it blue or red. Okay, let me make it red. So here is a point. How? Look at here. There was a time price got here and it went up. Look at here. Let's check to the left. Your own is just to see any market you want to trade. Just look at the history of the market. Check to the left. Let's see weekly time frame. Weekly doesn't have much history. So here is a point. It's a turning point, all right? So what do? Let's go back to daily. Right, daily has also showed us some T turning point. Remember, they are not straight line, so don't expect a straight line here. This here is a zone, right? So I'm going to do to, so you can add the wick and the body. So here I'm going to add the body of the candle. Look at the body here, and then the wick here. So this place is a zone. Now another zone I can see here is, let's see this wick. Okay, the body of the candle, right? And then the week here, right? So this is a zone. Now that I have mapped out this zone, what is, when I look at this market look like price is doing series of higher high and higher lows. Remember, higher high and higher lows means that price is going to the upside. This market does push up. This is higher high. This is the first push. It came down. It went to the second one. It came down. All right. So it's doing higher. Let me see if my trend line can work. Okay. Let's pick it from here. Right. So from here we can see even it cleared down a trend line on the upside with daily time frame. So let's now bring it down to, now that you have mapped out your points, your turning points. Let's put it. Let's see another one here. This is another one. This one here. Remember the week and then the body. Okay. So this place is right. So now that we've gotten this turning point, let's go back to 4 hours time frame. All right, you got the 4 hours time frame. You can see that price is rejecting from this turning point. So the best you can do is to allow the price to come down to this zone. This is a retracement. Price seems to be on an uptrend. Price seems to be on an uptrend, right? Because we are seeing higher high and higher lows here. What you need to do is to come back, allow the market, the price to come down here to either touch our trend line or touch this, get to this zone, or here it will give us a signal based on candlestick patterns. All right, once you see that candlestick pattern, you can now say, okay, I'm going to go into a buy. I'm going to buy this market because what price has given me a signal. At that time, you can come back to a lower time frame for your entry, but always use the daily time frame or a higher time frame to analyze your market to see the direction of this market is an uptrend. So we expect that the price will come back to retest this one or here, or the worst, it come back to this place to give us a buying opportunity. At this time, you can even use Fibonacci retracement. Now, this is a Fibonacci. Now, I'm going to do swing high. Is give me, let me set the colors. Let's see if I can use white. No, I don't want this video to be long. Oh, I think I will come with another video on how you can use this Fibonacci retracement. At that time, you can even use Fibonacci retracement to check the level of pullback. All right, I add Fibonacci retracement as well. So if I take my swing high, all right, to okay, let me change this thing to maybe the background to white so that we can see the Fibonacci retracement very well, because okay, it seems very bright. Ooh, very bright. All right, so you can see, let me see here. This is swing high. You drag this to the upside. Good. Now, if this thing retraces to 38, 50, it may sometimes it may turn from here. This 38, all right, 38.2 or 50 or even 61 points. But it must, if it breaks through this Fibonacci, that means this is like, for this example, this is 61.8. If it breaks through here, that means the market is heading to the downside. But for now, we are going to be watching this market coming to test these Fibonacci levels for us to enter for a buy. So you can see that with higher time frames, the market becomes so easy for you to watch and enter a trade. It's no longer, don't be using 1 hour, 1 minute, 2 minutes to analyze the market. Use higher time frame to see the direction of the market. You can see clearly that this market is an uptrend and we are waiting for this price to come back to test these Fibonacci levels, then we cannot join the market, the trade for a buy. So I hope this video helps you understand. If you don't have, if you don't understand everything, you can watch it again over and over. Also join our Telegram group. We have three Telegram group that I post ideas on how to trade. Also materials to help you grow, professionally in this business. Join the group. If you have not created your account with the Reef, use the link below this video to create an account with the Reef and trade this market and make money from trading. All right. I'll see you some other time. Thank you for watching. Bye for now. Once again, subscribe to this channel. Before I forget, please subscribe to this channel and also click on the notification bell so whenever I post videos like this, you will be among the first to be notified. Bye for now.